Welcome back, YouTube. Today's video, we're going to be talking about the liquidity search that's going on in the market across the board. Last time we talked, we discussed about this liquidity zone being a major one for Doge. And historically on this run so far, we have always been able to grab liquidity and start a trend the other direction. So this time it's no different. We've been able to do just that. And the beautiful thing is we broke out of the previous channel that we had going on here on the daily from around, what is this, the 6th of June. This liquidity, when we were able to break out of it, because typically when we came down on the 18th, we had that low of around like 11 cents. And we did get a green push to the upside, but it also was a lot of downward pressure here. That's why you have that long wick here on this green candle. I'm going to try and zoom in so you can see it, but a lot of downward pressure coming in, pushing it back below the 200-day moving average here. Now, if you are looking at, because I want to compare it necessarily to stocks, but if you are looking at the outside of liquidity zones and signals here, if you're using moving averages and you say, hey, what are the absolutely great times as far as your positioning, or if you're at if you have like a great average for where we are now, because some of you, if you're buying if you want some below before we had the run up, or if you bought some back when we were, even around these consolidation levels, or initially if you were purchasing prior to the start of this year, your average is probably somewhere mid-range here, probably somewhere between like 10 and 13 cents. I would say a lot of that. If your average is, especially in the bull cycle, if you're at the 200 or below, that's this red line here, it's much easier to get returns. And that goes for anything. That's not a crypto thing. That's not a Doge, certainly not a Doge thing. That's for anything. If you have the 200-day average on Bitcoin, you typically are going to print money. If you have the 200-day on Apple or Microsoft, or you have the big movers in the market, if you're able to have an average around there, it's much easier to print money, because at the 200, things typically don't even consolidate there. You'll have, outside of like a recession in the stock market, you'll see something consolidate around there, or completely being out of the bull market in crypto, you'll see things eventually consolidate there, because 200 days is it's a long time, right? So, and typically over the course of the year or the cycle, things usually not consolidate, but they typically rise above that. So it becomes much easier to turn a profit. So if you're wondering about your average, I know some people were questioning about like flipping and, selling if it got near their average, with the thought of it going potentially down. That can work, but that's just one of the things I was answering in the comment section, is that can be very tricky, because this is a known liquidity pool around that 11, 12 cents mark. And it's so much so that we broke the channel here, and we did get that big green move on yesterday's candle up to almost around 13 cents. And so right now we're a little red here, but we are out of this this channel here and above it. So we're still in this liquidity zone, which is fine, but we are roughly around the 14-day again. So that is a reversal in trend, because you can see here we were below the 14-day pretty much for like the last week, right? And then we had this move up yesterday. We touched that liquidity pool. Normally, if you break below this, what is this, like 1182, a green candle soon follows, right? And that's not just for this. You can go back and look at May 1st, April 13th, March 19th. I'm calling out the dates for those of you who like to follow in the charts as well. You can go back and check those dates. You typically get a green candle very soon afterwards, and grabbing liquidity from here. The size of it depends, because they're not always huge, but this is certainly, you got your hammer here. This is certainly a reversal candle here, that you were able to get some significant moves to the upside after that. So I was going to keep that in mind as far as for liquidity. We'll see as far as from where this is going to break above, because we do have as far as for where we close, we have wicks below this point, but as far as where we close, we also have around 1312 is a pretty significant point as well, as far as where a candle action actually closes. So we can see if this will be something where we can get the candle action to, if the candle action we actually use 1312 as kind of like resistance, or if we can kind of flip it and start a trend similar to what was happening back here on some of those days I was calling out, like March 1st and stuff. So but that's a few days out here. As you see, we're getting somewhat of a push down here, but just kind of something to monitor, to look forward to. Let's take a look here at shorts. Shorts are coming out. Oh my God, that is a deep drop here. Shorts dropped 57.87%. So typically we see that because they're not getting necessarily wrecked, but what this, when you look at this here, because even here you have a big, this is a big reversal here. Even though this candle is green, this is a huge wick here when you talk about like short interest, right? So when you are seeing these types of flips, typically you'll have a profit taking or a combination of profit taking and then believing that the asset isn't going to go much lower. So when you are in profit because the asset did go down, but you're seeing resistance on it going down, you're risking the profit that you already have. You're risking losing it, because if it's refusing to go down, then that means it's testing for higher, right? So I hope that makes sense. So if you are looking, if you are, because there's some people that even follow my channel that's short, but so if you are one of those people that's short, they're typically taking profits now because they see the resistance on it to go lower, because they had no trouble over like the last week getting it to go lower, but now you're starting to see the green candles, the stronger moves to the upside, the wicks are getting longer. So this is a test for higher. So typically that means, okay, we need to take some profit here, because if it runs higher, then you start losing that profit or potentially put yourself in a position where you'll actually end up owing money. So this is very interesting here, but we'll see here for shorts and what that means for the overall movement. But that's technically a good sign here. If you're looking at the chart that we just talked about and talked about breaking out of the channel to the upside, and then you see shorts moving out, then you're starting to get the charts to agree with each other. So it gives you just an idea of kind of what's going on here and what to expect in the markets here over the short term. Let's see. I'm going to try Bitcoin, something similar. We did reject. In the last video, we were talking about this mark here and what happened previously. So this happened really, really close to what we talked about. We were talking about the wick sometime breaking it a little lower, but we got the bounce just like we did historically. So this is playing out actually literally like what we talked about. So this is great. We have had the 14 cross the 72 here. And the unique thing about these patterns is the 14 crossing the 72, or that golden cross that we were talking about, has always been significant on this trend when it came to the upside. When it came to the downside, it did not get the same type of price reaction, which means that it was a more extreme upside run when it was a 14 crossing the 72 in a golden cross. But in the death cross scenario, where the 14 crossed the 72 to the downside, it did not have that aggressive move to the downside. And I can give you some examples here, right? So this is the 14 crossing the 72 back here in October, right? And then we got the signals, 14 cross 72 and the 200. And then we got on this really big tear here. And then we had the 14 cross the 72 here at the, what is this? January 26th, right? We're on the downtrend, right? And you're saying, okay, this is a big signal here. It's probably going to go into a big sell-off. Well, it was actually marking, the 14 cross 72 was actually marking somewhat of the end. By the time the 14 cross the 72, which is the 2-week indicator crossing a little over a 2-month indicator, the consolidation was over. And it immediately crossed again to the upside. And it had literally, that signal confirmed itself within 24 hours. And for those of you that chart, I'm talking about February 5th and February 6th. That chart confirmed itself, and then it went on a tear. So we're talking about a very minimal drop here. If you're looking at crossing price action, we're talking about 44,000 to a bottom of 39,000. So we're talking about maybe like 5,000 for the death cross. The golden cross going from 41,000 to a high of 73,000, right? And then we have this scenario again, right? We have the death cross here at, what is this, April 25th, April 26th, candle to the downside. This one did signal it because we ended up at around 56, so it wasn't signaling the end of it. And then we had the golden cross here, and then we went on to retest the pretty much around the all-time high around that range several times. I'm looking at, even here on the daily, I'm looking at least 5 times before getting rejected and going lower for liquidity. So like this is not a. This is one of the reasons why I like this indicator. I know some people are like, "Oh, what happened to the golden cross?" The golden cross has been fantastic when it comes to getting evidence of liquidity coming into the market. Right? I'm not saying the golden cross is 1,000% accurate, and I can put it in the Bible because it's going to happen, but it's very accurate here, and I am very, very confident when it comes to charting it that it's a great indicator for price action coming into the market. So what we're looking at here is we have the death cross here at the 23rd. So if this plays out how it has been playing out, we're going to see a minimal. I mean, this could be signaling the bottom, like we had back in October, or this could mean some slight consolidation additionally, like what we saw in April. And before that touch to the upside. So we'll actually have to see. I know there's some catalysts saying that, what if the bull run is over, or what if they underperform this year? I don't think we have evidence of that just yet because it hasn't done anything. Neither of these coins, specifically the ones that we talk about on the channel, have done anything they haven't done over the last few months, right? Going down to 11, 12 cents, Doge has done that a few times. Going down to 58,000, 60,000. Bitcoin has done that a few times. So, people weren't calling for a peak bull run in March or in April or in May, because it literally has done this on every 30 days. It goes, grabs liquidity and retests the high. So, and obviously if it's getting rejected off of the high, that's going to play a part in liquidity coming into the market. But we haven't seen anything that says, hey, we're going to have this big sell-off here, and that's going to be the end of it. And even if you drag out the charts here and kind of get a broader scope, you'll see things like Bitcoin going from 12,000 to 3,000 before rallying. You'll see even in peak bull run, Dogecoin going from 45 cents to 12 cents, right? So we've seen these type of things before, but I do believe this cycle is certainly panning out to be different from previous cycles. But it doesn't necessarily mean that we're going to have that we've already hit peak bull run, because what we do know historically is we're not retesting for higher, grabbing liquidity typically that quickly, especially for something like Doge to retest and break out of channels. Like when the market, I know you can have like the SNL factor, but when liquidity was leaving out of Doge, we saw huge candles to the downside here, and they were mostly red. You'd have some green in there, but it was just obvious that we were looking at major liquidity zones for the consolidation at that point. So I don't necessarily believe that we're going to see that just yet. And even again, historically, I do believe this is different somewhat, but historically, you have the peak bull run Q4, Q1 of the following year. But this run here does put us in a good position, or the fact that we ran early and where we consolidate at, or how much time we consolidate. That certainly it gives us the opportunity here to gauge whether or not we need to adjust some like those higher numbers. But it doesn't mean that the bull run is over, that the cycle necessarily is shortened, because we ran early and we haven't given up those gains, neither Doge nor Bitcoin. So the question is just going to be, and it really just stems off of what we're talking about, is what leg 2 is going to look like, right? Before we get to Q4 and all the election drama, Q1, all that kind of good stuff, how strong is the next leg to the upside going to be? And what are those numbers going to be? Like, is Doge going to be able to hit 45 cents on that next leg up? Is Bitcoin going to be able to go into the 100,000 range on that next leg up? And that will give us an idea for some of these targets that we have for Q4, Q1 of next year. And that will also give us a range to say, hey, based off of previous trends, we are on track to hit some of these targets, or the trend is performing absolutely phenomenal. We may have to move some of the targets up, or hey, the price action here is underperforming, and maybe we need to move some of these targets down. We'll get a lot of those answers when we have this next. That's the next leg up. So that's kind of what's locked into this price action here, as far as where we consolidate it, and the price action and the gap in price between where we are now and some of these targets here for leg 2. So with that being said, I hope that provided some insight on some of the things I'm looking at, price action, what's going on in the market. Let me know your thoughts in the comment section. If you have not yet, please consider subscribing to the channel. I greatly appreciate it. We certainly have some time now to get to 100K before BTC. So if you can help with that, I'll greatly appreciate it. I appreciate all of you as well. Thanks, and I'll see you guys in the next video.